Welcome to A Canadian Investing in the US, a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the US with Glenn Sutherland. This week, my repeat guest is Rahim Madhavji from Knightsbridge FX. So I had Raheem on originally in episode 23, which was 6 years ago, episode 90, 4 years ago, episode 189, 3 years ago. So we needed to do another one. It's been 3 years. But we are going to be talking about the dollar and, some forecasts. What I want to say before we go into any of this is just like nobody can really say. There's a lot of political things. There's a lot of different parts that go into this. So what we're sharing is just our opinion. It is not financial advice. Don't bet your life savings on this, or actually don't bet anything on this. But we're just giving our opinion from what we understand, what research we've done. So please take it fairly casually. Raheem, if you want to start off by giving everybody a little bit of an intro to yourself, and we'll get into this.
Sure. So thanks for having me. It's glad to be on again, and it's great to see everything thriving and the viewership growing. So my name is Rahim Madhavji. I'm the president of Knightsbridge Foreign Exchange. We're a currency exchange company in Canada, and we compete with the banks to get you better exchange rates if you're buying or selling US dollars. So if you're exchanging money, we can try to get you a better rate than the bank based on what their posted rates are.
Yeah. And maybe I don't give a financial advice still, but I have found that it's almost always is better than the bank to use a currency exchange. The odd time you might be able to get them to do a match with one of these exchanges, but typically the rates are a lot cheaper there. That's my blurb for it. But Raheem, so right now, we're recording this right at the end of December. They kind of have this air right at the start of January. Right now, the interest rates, or I guess if you were going to buy dollars right now, we're at, I think, 1.43 right now. At least that's when I checked yesterday. I think a lot of people who are listening to this, it seems like a big hurdle to buy US dollars right now. Do we see this getting better? Do we see this getting worse? What kind of things are influencing this right now? What could change?
Sure. So I'll talk briefly about the main drivers of what's impacting the loonie, and then that'll help people kind of form some opinions on what they think of those factors and where it'll go. So at the end of the day, everything comes down to the economy. If the US economy is doing better than the Canadian economy, then the flow of funds move down to the US and investment moves to the US. So basically what's been happening is Canada isn't performing as well as the US. And as a result, the Bank of Canada is reducing rates and at a faster pace than that of the US. The US also cut rates yesterday, but the Bank of Canada did 50 points. The US did 25 points. And the Bank of Canada has been moving faster and at a higher clip. When those rates come down, money moves out of Canada into the US on a relative basis. What drives the Bank of Canada action? It's the economy. If the Bank of Canada thinks the economy is not performing as well, they'll reduce rates to spur, lending growth and borrowing, and people will start borrowing to invest. So that's what they're trying to do. So that's the main driver of the difference between the two. There's one other factor with, what's going on is, especially with the potential threat of tariffs, that'll come. So there's a bit of a premium where that could really, it's an on-off switch. If it happens, it's going to be pretty deadly for Canada. Yeah. And so there's a bit of a risk premium built into that. And it's a bit of an overhang on the Canadian economy until really that gets sorted out. So there's a risk premium that's caused the US dollar to go up or the loonie go weaker because of that. So obviously we don't want that to happen because it'll impact the Canadian economy. So those are the drivers. It always comes down to whose economy is doing better, and that drives everything else.
Yeah, that makes a lot of sense. And so in all honesty, when I was looking at it, I saw that the inflation rate seemed to be lower in Canada. So that doesn't drive the economy then.
So it is a factor. The key factor is you want to really look at forecasted GDP growth. So how good is the economy going to do over the next 4 years? There's some built-in US exceptionalism with President Trump, going to be coming into power. in a month or so. And with deregulation, lowering taxes, that's going to spur some investment. So there's some run up that you've seen in the stock market prior to that. You've seen the US dollar run up because of that. The threat of tariffs is also bullish for the US dollar. So people are just expecting the US economy to do better. Inflation is a factor that obviously the central banks need to consider. So inflation is running high, then they're not going to reduce the rates so quickly because people will just borrow. It'll keep continuing to overheat the economy. So if you're seeing inflation start to come down, which it has, then that allows the central bank to reduce rates to spur the economy. You don't want to overheat the economy and have inflation come back as where it was before, over the last, 1 or 2 years, because that has its own impact. But they want to spur the economy without really spurring too much inflation, and they're trying to needle it. But as you're seeing inflation come down, good thing.
Yeah.
But now they're lowering rates because the GDP growth isn't there.
Yeah, and I was just reading it, like the Americans, they haven't got they haven't been doing enough rate, like they haven't been doing as many rate cuts as Canada, just because they haven't seen the whatever we're just talking about. But
they haven't seen the inflation come down as much.
Yeah.
I mean, it's come down, but the reason it also hasn't come down is because their economy is still hot. Like, their economy is still generally doing on a relative basis better than Canada, and that's driving the investment and the flows. That's why they can't reduce the rates as much in the US. Canada does, and then that moves money from Canada to the US on a relative basis.
So are you seeing any indicators? I know we're not really supposed to be, our idea isn't to be talking about rate drops and stuff, but did we see any indicators that either side should be doing more rate drops?
Yeah, I mean, it's everything is pretty much on a wait and see basis. So they really say it is data dependent, and I think it really is. I mean, I think we're at a point where we need to see, is inflation coming down? How is unemployment? How is GDP growth? And they take it on a month to month retail sales, or a quarter to quarter basis. At the end of the day, I think the Bank of Canada is of the position that they want to spur the Canadian economy, and they want to lower rates because the Canadian economy isn't doing as good as it should be. And so the central position is just generally, we're going to lower rates to boost that up until it heats up again. So that's kind of the general thesis. And as I said, lower rates are bad for Canada. There's also the risk of tariffs. So, if tariffs come into play, the economy starts to tank, they lower rates even further. And that's why you'd see the US dollar run up even higher. I mean, you could see if tariffs did get implemented and we don't take it seriously, or we don't do the things we're supposed to do to not have the tariffs come into place or negotiate our way out of it, you can see the dollar hit 150, as, kind of a scenario that could happen. Now, at the end of the day, the dollar was also at par in 0809, back to the kind of glory days of the loonie and oil prices and stuff. So these things move in swings, they go up and down, and COVID happened. And the dollar went pretty much back to where we are right now. So I think it all comes down to the economy, and then who's managing the economy. What are people doing to spur? So I do think there is the expectation that rates will continue to come down in Canada. In the US, I think they're forecasting 2 rate cuts over the next year in the US, and in Canada, it's much more than that. But they'll wait to see how the data looks to continuously kind of make those decisions. So ultimately, it's the bet on the currency is the bet on the economy.
Yeah, and what I really want to ask is what you think is going to happen in the future, but a lot of it is going to come down to these tariffs, the economy, and really where it's going to go. If somebody was sitting on the sidelines and just going, should I be buying now? Should I be holding now? If you had to take a wild guess, do you think it's safer to get in now, or do you think it's safer to wait if you wanted to buy US currency? I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to CanadianInvestingInTheUSA.com/mistakes. And let's go back to the podcast. And it's free.
Yeah, sure. So basically, I think that there's winners and losers kind of on both sides. If you are receiving US dollars, you get paid in US dollars, you're a tech company, you have an inheritance, you're getting an income stream in US dollars, your portfolio rebalancing, you're quite happy with this increased margin of the US dollar appreciating. On the flip side, if you're, doing a lot of business where you're buying US dollars, you're probably not as happy as, you were a year ago. I mean, it's been about a 10-cent swing in the last year and maybe about an 8-cent swing since the fall. So that can, really impact people's margin. But if people own US assets, they're quite happy with the appreciation of the dollar. So the way I generally operate is I try to take the guessing out of it and then make the business decision of I buy when I need to buy. So the moment I know I need to make a purchase, that's when I make the purchase. I don't try to guess and time the market. Even though I'm in this business and I watch it all the time, I'm not in the business of trying to guess what's going to happen. There's too much uncertainty, right? You've got wars going on. You've got, stuff happening with Russia and Ukraine. You've got Syria. You've got, elections. There's all these different types of events that happen. So I don't try to time the market by trying to guess what's going to happen. That being said, I think, the momentum is really behind the US dollar in the short term. The economy is doing better. You've got, new leadership that's looking to reduce regulations, reduce taxes. That's going to spur investment in the US. And generally, the thought is that's going to boost their stock market and kind of stuff like that. And basically GDP growth, you've got someone business minded, generally should bode well. On the flip side in Canada, there's a little bit more turmoil in Canada. I think, you pretty much an overhang till about a year to figure out, at the end of the next election, are we moving in the same direction or a different direction? And if you move in a different direction, then that could unleash Canadian commodities, Canadian energy, pipelines, investment, tax cuts. I mean, I haven't followed the policy so closely, but that could also flip things around. Now, it doesn't flip immediately, but these things oscillate, right? If you see oil prices at $120 a barrel, it's good for Canada.
Yeah,
we sell so much oil, and that trickles down eventually. And if we have a recession or oil prices keep going down, then not as good. So we're very resource heavy, and that generally comes in cycles, up and down kind of over time. So I think in the short term, probably a little bit more pain for the Canadian dollar. But I think, the expectation is, maybe in 1 to 3 years, you see some of that revert back to the mean as, oil prices, production, a bit more focus on the economy, things like that start to benefit the Canadian economy.
Yep. No, I totally agree. And I like that you said that to not try to time the market, not try to time the dollar, because I like to say the same thing too, because if you're, some people they sit on the sidelines waiting for an excuse not to buy real estate or not to make the investment that they're going to make. If the investment makes sense to you, go for it. Ideally, if you're doing this properly, your investment should be paying you back more than you put in. And when that money comes back, you'll get to reap the rewards on the other side of it, right? So if the dollar went the other way and you were going to say, hey, say the Canadian dollar was higher, and you'll be like, oh, there's a great advantage to buying in the US. But if it changes, then when you bring your larger chunk afterwards, you're going to say the exact opposite. You can always find a downside to this, and trying to time the market, trying to time the dollars is going to honestly just be a distraction. Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
Yeah, and exactly. So you kind of dot the I's and cross the T's, and if the numbers kind of work out, I try to make my decision at that point. I don't try to time the market. You could spend endless amounts of time watching the market, watching the currency. It just takes you away from your core focus. Yeah. Obviously, if the numbers don't work out, the numbers don't work out. But you've got to kind of move ahead, right? I mean, as I said, you've gone from par 0809 to 140. So there can be some wide swings.
Oh, yeah.
But, people kind of also need to move on. People really just want some stability as well, right? I mean, if the numbers kind of check in and out at the same level without too much volatility and movement, then people are okay if they can run their business or make their investments, with the focus that, they'll have some not too much volatility around it. But as I said, that's the way I take it. And if you wait, you could wait for quite a long period of time before things change. And at that point, the thesis that you have, or investment thesis, those numbers might be different, and you might have overpaid in a different way. So,
yeah, totally agree. Before I let you go, let's talk a bit about Knightsbridge, because I think one of the big fears, and wasn't one of the reasons that people don't use a currency exchange and just keep going to the bank, is that they just don't understand. They just don't understand how it works. So could we maybe just walk people through how a transaction would go? If someone, say I wanted to move some money from Canada to the US, let's go through the steps of how they would do it so that they just understand the process.
Yeah, absolutely. I mean, we've been around for over 15 years now. And basically, what we're really trying to do is get you a better rate than the bank. So if you're going to buy US dollars and you go to your bank and you get a price, and you go to us, you get a price, our price is better, then we want you to work with us and you'll save money as a result of it. Obviously, we make money as well, but we just make less money than what the banks do. In terms of the process, it depends on the bank it's coming from and going to. But there's 2 or 3 ways to do a transaction. One of them is we can debit your Canadian account and credit your US account. So it just goes from one account to the other, Canadian to US, using a debit and credit process. And that just moves between 2 accounts. Pretty simple. It's a little slow in terms of time. It's not immediate, but we kind of do all the work.
You got to wait for stuff to clear.
You got to wait for stuff to clear, exactly, and make sure it's good funds and all that type of stuff. And then also there's no cost to the customer on that side. So we're absorbing that. And then as a result of that, the banks don't work as fast. That's one option, is we just debit your Canadian, credit your US, or debit your US, credit your Canadian, or vice versa, depending on if you're buying or selling. The other is you can do a bill payment to us with some banks. We're listed as a bill payment with some banks. If you're sending Canadian dollars, you log in online, you add us as a payee from your mobile app or your online banking. We should be listed there. You pay us, and then we pay your US account or whoever you want to pay in the US. If we're not listed as a payee, then you do a wire transfer. You go to the bank, you do a wire to us, we do a wire to you or to the US, wherever you need it to go. There's obviously a cost in doing a wire, so that's a little bit cost prohibitive for smaller amounts. But we generally say if you're doing like 10,000 or more, if you're going to send a wire to the US anyway, then you were going to pay for the wire already, right? It's not going to make a difference. But as I said, if you're doing like 10 grand and we can save you 150, 200 bucks, and then you're paying 40, 50 bucks for the wire, you're still kind of net ahead. And obviously, if you're doing more than that, and you're going to be saving more money, then the cost of the wire is really not as important as what you're saving on the currency exchange. But for those that are sensitive to the wire fee, then we just recommend doing the debit and the credit. There's no fee to the customer. You check our price, check your bank's price. You work with who you want. It's tested out with a small amount. Let's call and say, hey, I just want to do like $1,000 or $2,000, something very small and nominal, just to see how it works. And if you're happy with it, then you run with it. And if not, there's no obligation to use us, and no fees. You can switch back to your bank anytime.
Yeah. And with Knightsbridge, like you said, all the fees are like included in upfront, or not. They're not really any fees. They're just, it's just going to be your wire to actually do it, or they're going to pull it, and they're going to be absorbed by them. One thing I will mention, because some people might be curious about this, if you're using a different currency exchange, do ask about fees. I've tried, I think most of them, and the one I have found, some of them have you get this bill at the end, and you're like, how did it not add up to the right amount at the other side? And sometimes usually it's just that there's a fee, a transaction fee that doesn't actually show up. They didn't disclose beforehand, at least with me. Whereas Knightsbridge did not do that. Like I knew exactly what was going to come up on the other side. I know that sometimes there is like a mystery $10 that goes missing. It is not Knightsbridge. It is like, I don't know who. Maybe you know the answer to this.
Yeah,
but sometimes their money just goes missing. A little bit.
I mean, it's kind of the banks being a little greedy, but the way it generally works is if you're sending money within Canada from your Canadian to your US account, and both accounts are within Canada, you won't get a fee to send it or to receive it. Okay, everything should move pretty smoothly between both accounts as long as they're in Canada. The moment you start sending it to the US, when you send a wire from Canada, we pay the outgoing wire fee. So, if you were doing a wire from Canada or we're doing a wire, go to the bank, you pay an outgoing wire fee, and we would pay that fee. When it goes into the US, it doesn't go directly to the bank that you want it to go to. There's like 3,000 banks in the US, or in Canada, there's like 6, right? So when it goes into the United States, it passes through intermediary banks. So it goes through bank A, then it goes to bank B, then it finally gets to the destination that you want. Each of those banks along the way can charge you like $10. So generally there's one intermediary bank and one receiving bank in most cases, but not all. Sometimes there's like a community bank that's really small and they need to piggyback off someone else. So that bank in the middle is charging $10, and then the receiver may or may not charge the receiver to receive a wire. Just like in Canada, if you get a wire from the United States, it might charge you like 10 or $15 to receive it. And that's your bank charging you for the privilege of receiving money. But they control the pipeline, so it's really hard to push them off of that fee.
Yeah, yeah. And even like you made it sound like it was only the little small banks that are doing that. There is, without doing name dropping, there's one of the big Canadian banks that operates in the US, and it is still
all banks will do it because it's there's no one to kind of push them off of that. So they're pretty much all charging to receive, and they're pretty much all charging as the intermediary fee. The intermediary fee is usually about $10, and the receiving fee, ranges from like $10 to $20, depending on the bank. Kind of the cost of doing business. If you do a lot of wires, you're kind of used to it. The first one's a little alarming, and then after that, it's you're kind of just used to it because there's no other alternative. But the goal is, as I said, like we focus on the currency exchange. If we can help you save on the rate, then everything else should kind of work out.
Yeah, and if you're gonna if you're sending money like straight to a title company, I usually just suggest send an extra $10-20, and worst case scenario, they'll send it back to you. If it makes it all the way to the end and the whole amount is there, then they'll just give it back to you because they don't want it. They it won't balance their books. So you just
and some of the title companies that deal with a lot of Canadians, they'll start to include that in their fee and say, hey, it's add on $25 or add on $30. They don't often, because they often work with a lot of domestic people in the US as well. Yeah. It's always good to add $10 or $20 rather than the headache of arguing
with for buying a house by $10. Yeah. I the first time that happened to me, they're like, no, we don't take credit cards, but they would for $10 just to get this thing across the finish line.
Right.
Don't be that guy. Just send $10 extra.
Yeah.
Raheem, this was awesome. Appreciate you coming on the show. If people wanted to find Knightsbridge FX, where do they go? What's the website?
Yeah, so you can go to knightsbridgefx.com. We've got a live chat on the bottom left during business hours. You can always just go there, ask any questions. We have a contact us page where you can send in an email, and would be glad to get back to you, help you do comparisons, and then go from there.
Awesome. Well, thank you for coming on the show for a fourth time. I really appreciate you spending some time with us.
Awesome. Thanks for having me.
That was a nice video. Bye.